Welcome to the May 27th, 2019 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, President, McGowanGroup Asset Management. Special shout out today. Our adoring fans, Cheryl and Terry, got me a new power tie with accoutrement, and I am very grateful. Thank you, Cheryl and Terry. Diving right into this week's financial report that gives you the read truly on the global financial markets and investment strategy implications. Dow Jones Industrial Average, that's range bound is our diagnosis. This week wilting from about the 26.5 level down to 25,000, around 500. We had a big sell-off Thursday. That was the trade war headline. Dow was down about 400 points. This has been going on ever since back there in early 2018. Each time we get one of the bad headlines, everything goes down, and then it tends to make its way back up. Then, if we ever get Trump and Xi on the same table, at the same podium agreeing, well, look out, potentially a new high, but not probably until then. Russell 2000 Small Stock Index also range bound, and this week wilting as well, but more consistently what we're seeing is that across U.S. equity, the range bound thesis that we put forward back here, right here on the YouTube channel. That's why you subscribe to YouTube McGowan Group. We called it back there, range bound. This new high was actually a head fake, not too much higher than that, and you can see the resistance at this level, and we hit that 22,000 at Christmas Eve. Let's go to the global interest rates. Massive buying in long treasuries this week. Remember the headline that China's got $1 trillion worth of treasuries? It's actually about 1.15 trillion, and they're going to sell them all just to spite Trump. Well, guess what? A massive wall of buying hit U.S. treasuries this week, pushing the yields down, the price up. What did we get? Well, we got down to 2 3/4 on the 30-year. We got a brief yield curve inversion where the 10-year went to the same 2.3 as the 90-day T-bill and 10-year, both together. And if the 10-year's below that, it's an inversion. And there's a lot of superstition that that's bad for the market or it portends a recession. We'll see. This is the relentless increase in the Fed funds rate reflected in the T-bill at the 2.3 now. What does it mean for long-term interest rates? Well, I want to explain one of the sources for the massive institutional buying in the U.S. Treasury that pushed the yield down, the price up. Here we go. Look at this 2-year yield. Now, these are the Treasury yields that you could get for loaning your money to Switzerland. They're going to charge you 7/8%. That's called a negative yield. You pay money to own it, you get a little less at the end. In the United States, you get a healthy 2.16% on the 2-year. Notice that's less than the T-bill. And Canada only has to pay 1.6%. Brazil only 2.8%. Argentina 15%. Mexico 2.7%. Global yields way down. And the Treasury, it looks like the best bargain out of the whole world. China, you only get 2.8%. And if you go to Australia, it's only 1.1%. Notice the U.S. yields are above everybody else. What that means for the future, anything paying over 2 or 3% is a high cash flow asset. Let's look at energy infrastructure real quick. This is Kinder Morgan. You can see a $45 price back there in mid 2015. Then we went all the way close to $10. Now $20, but strong, making 52-week highs over the past few weeks on a consistent basis. This is one of the big pipeline companies, and the shale revolution, the Texas black gold rush, that oil and gas flows through the pipes, liquid natural gas exportation, poised to benefit this company. And if we look at the net profits being generated, it has an opportunity to go, not without price risk, here to maybe $40 or $50 per share over a 5-year period. Plus, it's got a nice dividend in case it doesn't actually go up, but you could double and you got a nice yield. That's one of the diagnoses for what to do over the next 5 years: energy infrastructure and global high yield, where you can get yields above 6%. Here you can get a healthy yield and some potential appreciation. Let's move to the next subject. Here we are with gold. Should I buy gold? Well, this chart looks pretty flatlined around 1300, 1281 this week. Notice the run to 1900 in gold. 2011, the premise was massive inflation because the Federal Reserve printed $4.5 trillion in electronic currency and bought bonds with it. Well, not so fast. You can see what's happened to gold since then, flatlined. But there was another period like this where gold was not a good investment at all. There was back here, if we go back to 1989, what you can see on the gold price, this flat period to 251. Prior to that, in 1980, gold hit 800, then hit a low of 251. Prices doubled over that period according to the CPI inflation index, and gold went to less than a third of its starting point. How good of an inflation hedge was it during that 20 years? How good of an investment? No cash flow, and you went to a third of your value adjusted for inflation. You lost a huge part of the money. And then we went to 1900. So far, so good. But now we're flatlined. Could it be another time period like we see down here? Flatline gold prices. That's why we're not buying gold at this point. Tesla, just for fun. You can see Tesla came public in 2010, a huge success for investors that had some patience, went from 10 to nearly 400. Elon Musk says we're going to take it public or take it private at 420, buy everybody out. Didn't happen. Now $196. It was a race to the bottom this week in Tesla. They still aren't making money. And we've got analysts at Morgan Stanley saying it could go below 100, down to as low as 10, and another analyst saying it could go to 35. Looks like a driverless race to the bottom, a warning for investors. I'm Spencer McGowan, President, McGowan Group, your financial weatherman, proud to be with you each week. Be sure to subscribe for fast breaking news and warnings, as well as headline implications for investment strategy. At NetWorthRadio.com, you can also fill out the preliminary client questionnaire and schedule your call or your free brainstorming session at the Crescent with the team that cares, McGowanGroup Asset Management. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.